Excellent. All right, guys. Well, look, thank you so much for coming along. Really appreciate you giving up your Wednesday evening to spend with us tonight. Hopefully it's an informative and enjoyable session. Obviously, crypto, tax and money. Three things that everyone loves to talk about. The middle one we don't ever want to pay. So naturally there'll be a bit of focus on that tonight. Where do we put our money? There's plenty going on in the world. Obviously we've got Russia, Ukraine, China, Taiwan, Western Australia and the rest of the country. And then our glorious leaders doing their best to keep the media entertained. But tonight is really going to be an interactive Q&A session. So I'll be facilitating some questions. We've got Joel, Senior Financial Planner with Ally Wealth Management, and Aaron, our Chartered Accountant, crypto tax expert. So we've got a whole raft of questions that we'll be going through. But as we do, if you have any questions, fire them through. Our aim tonight is really just to educate, inform, and hopefully make sure you get a lot out of tonight. There will be plenty of food and drinks after. Should be nice and cool out on the balcony, so there'll be plenty of time for some refreshments afterwards. But let's dive right in. So just make sure technology is on our side here. Now, look, before we do get into the crux and the material, naturally being financial planners and accountants, we need to have a bit of a disclaimer. Nothing we go through here this evening throughout this session is personal product advice. It is all for your own entertainment and hopefully enjoyment as well. Naturally, if you do want advice, come and speak to Joel or Aaron after the session. There'll be plenty of time for that. So enough of the boring and legal stuff. Let's get into it. So we call this our WIFM slide, the what's in it for me, why are you here, what are you hoping to get out of tonight? So we'll have a very brief introduction from both Joel and Aaron. They can tell you a bit about themselves, why you should listen to what they have to say.
Sorry, guys.
Okay. Then we're going to get into the Q&A. So what is cryptocurrency? How do you actually invest in it? How does it all work? What are the taxable events you need to be aware of? What does it mean if you're trading? Are you investing? How is the tax treated? What on earth is crypto mining? How do you do it? How is it taxed? What are some of the options there? Then we're going to get into how could you get exposure to this space, to this theme in super, in other investments if you don't want to go and buy the coins, invest in the coins. And then also a bit of our, I guess, both Joel and Aaron's outlook on where the market is going to head for this year. Naturally, not too many specifics around this coin or that coin. You can fire those questions through if you wish, and they will politely decline to answer, particularly given we are recording this session. But obviously conversations we can have offline. So Joel, over to yourself to tell us a bit about yourself and Ally.
Cool, thank you. Ally Wealth Management originally started, 1.5 years, 2 years ago, to cater for financial advice for Australians, no matter where they live around the world. So I was really lucky to join Ally basically as close to possible since its inception. I suppose we'd say within 6 months. So I have been a senior financial planner for say 5 to 7 years, and the majority of my career has spanned within financial advice. Previously, I've worked in ultra high net worth space, so that is private banking and private financial advice, and as well as mum dad advice, insurance advice. But the advice that we give here at Ally is very much a broad, holistic viewpoint, because we need to consider obviously lots of tax treatments and treatments of investments around the world. But the majority are, for example, superannuation insurance, life insurance, estate planning, repatriation planning, expat advice. So it's very much a broad catalogue of services.
Excellent, thank you. And Aaron, over to yourself.
Yeah, so I am in the tax space. I'm a sole practitioner from the office there. Yes, I worked at a firm for a while. Then I went into commercial accounting for 1 year or 2 while I was getting everything organised. I was there part-time. And yeah, look, I work with a lot of small businesses and SMEs, but somehow fell into the crypto space. I just had an interest in it. And then last year, there was an event at Perth and I got asked to be a part of it and speak at a convention centre about crypto and tax, and it kind of just exploded from there as well. And then kind of last week presented a couple of accounting firms about crypto and tax, so have a relatively good idea about it. That being said, there are a lot of people that know significantly more, but I can at least give you a guidance of, I guess, what to the main takeaways and what to look for from it. In particular, a tax perspective with crypto, because it definitely goes unseen sometimes.
Excellent. Well, thank you both very much for joining us. So let's dive right in. So Aaron, we might start with yourself. Talk to us about the basics. I've got a bit of cash. How on earth do I actually go about investing in crypto? How does it all work?
Yeah. So it's scarily easily to actually get started. It's as easy as literally downloading an app now. There's no verification for a lot of exchanges, and so you can literally open it up, deposit your money, and start literally buying whatever you want. Now, that's fraught with danger as well, because there's a lot of people who just jumping in and buying whatever. But in particular in Australia, there's a few exchanges, CoinSpot, SwiftX, and CoinJar. I think might be US, but they have an Australian section as well. They're really good because, again, cryptocurrency is a digital currency. Hackers are very prevalent in the online space, and obviously that's a big risk with crypto is pretty much your wallet getting wiped. These Aussie exchanges are really good, and in the scheme of things are very safe comparatively to some of the bootleg exchanges that a lot of people get into. Now, traditionally, most retail investors aren't going to go down that route. But yeah, I guess the simple answer, it's like buying shares with Comset. You open up the exchange and you can start searching through the suite of coins and go from there.
Perfect. I guess, Joel, from your perspective, from a financial planner's perspective, what are, I guess, some other ways to think about when it comes to investing in this space? What other ways do people, I guess, mums and dads have to actually get exposure to the whole crypto space?
So I suppose if we look at, from a financial planning perspective, cryptocurrency as an asset class within itself. So you've got obviously Australian shares, international shares, property, fixed income bonds, cash. If you want to deem cryptocurrency as, in a way, its own asset class, there's other ways that you can, I suppose, go around investing in that space without directly investing in that space. So instead of me going out and buying Bitcoin, there could be alternative investments such as, I suppose, investing in companies or investing in the technology space that thrives and, I suppose, is underpinned from that cryptocurrency environment. So lots of computers are needed to do the algorithms, facilitate the trades. So exposure, you could be already indirectly exposed to the cryptocurrency world without actually knowing about it. And then there's as well things like, for example, ETFs, so exchange traded funds. So you could, again, have a fund manager that says, I'm going to invest in cryptocurrency or technologies or companies that indirectly impacted by cryptocurrency investments. And obviously you can gain exposure that way as well, but it's just more or less through a stock exchange or other financial markets.
Excellent. I mean, it seems to me, anyway, as someone who reads the Fin Review on a fairly regular basis, every time I pick it up, especially on the weekend, there's a new ETF that's doing some weird and wonderful thing that's the next great thing. It seems like you can really get some quite narrow exposure if you wanted. Is that fair to say?
Yeah, and I know that, I was only reading something like a product update like last week, and it said that, some of the providers here in Australia will be launching, for example, a Bitcoin ETF, where that fund in the back end will be directly buying it, but your exposure is at a stock exchange level. So the back end, I think they're also bringing out like an Ethereum one. you know, and then you've got, I suppose, cryptic technology as well, ETFs. So they used to be obviously quite broad, where ETFs would say more or less focus on an index. So, for example, the ASX 50 or the ASX 100. But now they are getting quite more segregated in what they're investing in. They're getting quite specific. So it's probably likely within the next sort of 6 to 12 months, you could probably buy an ETF that is a Bitcoin ETF.
All right, so Aaron, let's throw over to yourself. Tax and crypto. When do I pay it? What do I need to think about? How on earth do I calculate it?
Yep.
How does it all work?
All right, so I guess going in the simplest form, when I guess the first Bitcoin bubble kind of kicked off in 2014, 15 is when it kind of started getting media attention. The ATO pretty much came out and said, look, we're going to be treating it as the shares. That was literally the terminology that was given. So you don't know, you buy shares for $100, you sell it for $150, you pay tax on that $50. If you held it for more than 12 months, you only pay half the tax. So that's in its essence the baseline of how it works. Now, practically, it's a bit different. You know, people are the traditional way that most people invest in crypto is they'll deposit money in, they'll buy a coin, and instead of selling it, they'll swap it into a new coin. Because that's even when you open these exchanges, that's the default position. Instead of actually selling and getting your cash out, is swapping into another coin. Now, problem that most people get is that they don't because they're not cashing it out. They're like, well, I'm not even paying tax on it. That's where most people are getting caught out, because every time you actually coin swap, so you go from Bitcoin to Ethereum, into Dogecoin, into whatever, every time there's a swap, that's a taxable event. So what's happening is people are racking up all these unrealized but realized gains when they're flipping coins, and then rack up gains of 100 grand, and all of a sudden have to pay tax of 35 grand, but they actually haven't cashed anything out. So they don't actually have the physical cash to pay the tax, and they need to source it from somewhere else. So that's a big pain point that a lot of my clients more people don't realize that every time they swap a coin, it's actually a sale. And I'm like, well, think of it another way is when you swap a coin, think of it that you're selling it and buying a new one straight away, because that's essentially what's happening. So I guess the main takeout there is, if you are doing that and you are swapping, because again, most people do it like that, just be aware that you do have to fund the tax from somewhere. And generally that's going to be a salary income, and that's fine. But it is important to know, because if not, I've seen firsthand people who've made all these unrealized gains in one financial year and, make 100K. And then in the next financial year, the market bottoms out and their tax bills pretty much equal to what their assets are worth now. So, they've got a tax bill of 50 grand, and all of a sudden their crypto's only worth 50 grand. So it's pretty important to kind of be aware that as you're selling, that there could be massive tax implications.
Unless you acquire.
Yes, the acquiring is fine, but unless you are acquiring from the swap. So say if you buy Bitcoin and you're going into Ethereum, that acquisition from Bitcoin to Ethereum is actually a sale of your Bitcoin, and then the acquisition of the next one is your new cost base, essentially. So, and people do again, because crypto is so volatile and it goes up, 40% one day, 30% down the next day. People are trading very often. So traditionally with shares, someone buys Commonwealth Bank shares, they're kind of holding it for quite a while, get some dividends, and then sell it down the track. That's not really how people are doing crypto. It's buy, hold for 3 or 4 days, sell, buy again. And so by the end of the financial year, people have racked up, thousands of transactions that you've got to kind of decipher. And most people don't know where they're at. They're like, oh yeah, I made some money there, I lost some there, I made some there. And so all of a sudden they're like, wait a second, I don't remember making 50 grand, and the tax man's knocking on the door.
Yeah, never nice to get a surprise letter or knock on the door from the ATO. Very rarely is it a check. Usually the reverse. I guess, Joel, from your perspective, one of the taxable events I always think of is changing your tax residency.
Mm-hmm.
So shifting into Australia, leaving Australia. Is that something we need to think about when it comes to holding crypto and moving to a different country?
Mm-hmm. So again, it's treated very much the same as shares. So if, for example, if I bought some cryptocurrency now and I decided to move to another country, what essentially I could do is I could say, as I'm departing Australia, you do a deemed disposal, okay, of those shares. That realises that CGT event in Australia, and then obviously the gain is acquired in that new country. And for example, if I'm moving to a country where there's no CGT, that could be very advantageous. As well as, for example, Jared lives in Singapore. It has very, favourable CGT concessions in Singapore. So, if Jared owns Bitcoin now, and he's deciding to move back to Australia, it might be worthwhile doing essentially a deemed disposal in Singapore, realising those gains, so that when they touch down in Australia, the cost base is essentially reset. So that can obviously have beneficial, outcomes in some jurisdictions. Obviously, it depends on where you're moving to or you're coming from.
Of course. And Aaron, I guess from your side and the clients you're dealing with, are you seeing many people consider setting up different vehicles to trade crypto, company, trusts, wife's name, kid's name, pet's names?
Yeah, a lot of the time it's slightly too late because, again, it's because it's so easy to open up an exchange. No one's really thinking, should I have a trust with, should I do it in a company or whatever? And to make it more complicated, certain exchanges, all you need is an email address. So you don't even put your first name in. So then there's problems about who's the actual beneficial owner, which is a problem when you start to deal with trusts. I'm a strong advocate that anyone investing in anything should at least consider having a family trust as the benefit owner. And so there are a few exchanges that are easy to do that with, some much harder. But it's a conversation that I try to have early, because a lot of the time people will come and be like, hey, I've made all this money, what can I do with it? And it's like, well, it's been in your name for the last 3 years, there's nothing you can do. So kind of having that, just think, if you've got a long-term plan, you're like, well, I'm going to be investing for the next 10, 15 years, then it's good just to consider if you should hold it in your own name, or if, a family trust is more beneficial. And yeah.
So if you actually transfer the money from your trust bank account into that app that you're using, can that be deemed as investment from your trust?
Yeah. So for example, I use SwiftX, and I have an account that's open within the trust. So when you log in, it's XYZ Family Trust. That's the owner. Now, not all exchanges have that level of ownership or reporting, and hence why, it's an Australian exchange. It's a bit more tailored for that type of stuff. But yes, that's essentially it.
Excellent. So start with the end in mind and actually consider what could go right, not just what could go wrong. Brilliant.
How are you actually tracking all of this, and have they got experts that are just monitoring the blockchain 24/7?
Yeah, so the first one is that with these Australian exchanges, most of them do have KYCs, which is know your customer forms at the start, and so at that point, and then that data is shared with the ATO. So pretty much when anyone opens an exchange within Australia, even Binance, which is a very popular exchange based in the US, they have no KYCs with the Australian government. So to the extent of what we know, that is what they have access for. Now, whether they have access to individual transactions, no one knows. And we were trying to figure it out recently, is because if you do have a crypto account or whatever, if you go into your MyGov and look at your pre-fill, there's a little section that says you have cryptocurrency activity. It doesn't say anything outside of that though. So we're unsure if they are tracking just money going into it, so your deposits and withdrawals, or if they have transactional info. Because, for example, with ComSec, if you have linked your tax file number with that, they can see individual sales. But in a crypto sense, some people have 30,000, 40,000 sales within one exchange. Now, if 100,000 people have that, there's a lot of data to store. And so my logic says they probably don't have transaction information, but we don't know. So they do have information on money going in and out though. So guess that's to the extent of what the ATO know and what they have access to. But I also know there's a lot of stuff that they don't know. And there are people who have been doing crypto for the last, before it kind of became big, who have things that I don't know about, because it's like it's like literally just in no man's land. But with nowadays, most people, at least in an Aussie exchange, the ATO will know you have an account, and at that stage, that's all we kind of know at the moment.
Yeah, right. So your clients that have made the taxable events have Australian accounts linked back to their MyGov.
Yeah, but then a lot of them have like 10 exchanges. Yeah. Because with crypto, there's other things that certain exchanges you can only do certain things with a certain coin. So sometimes they'll buy it in one, transfer it to another one, and if they, for example, they want to buy an NFT, you can't do that necessarily between SwiftX or CoinSpot. You need a transfer. You buy Ethereum, you transfer it to like another wallet, and then you can do it through there. The secondary wallet, the ATO might not know about, but the first one they will. So they'll know there's something going on. How long it's going to take for them to catch up, I don't know, because it's a lot of information. So I don't know how they're going to store it.
Yeah. Probably more the point is, do you really want to go down the line of trying to hide things from the ATO?
No, not really.
No, probably not.
Crypto since 2017, I think. So there's hundreds of transactions there that I'm thinking, maybe I should be worried about this.
I'm thinking of two things come to mind, right? You used an example of like buying CBA shares, right? You hold them for so long and then you sell them and get proceeds. So I know how to invest in crypto, but I don't know how you get your money from crypto.
Yeah, so the main way people are making, do you mean how people are making money from crypto?
No, if I decide, I need to make an income from my crypto investment.
Yeah.
So how does that happen?
So the main way is because of the market volatility. The main way people are doing it is by buying and selling and cashing in, 10 to 15% profits within.
What is cashing in? Tell me how
so
do I get my money back?
Literally by selling it. Like if you sold.
Who pays me?
Well, it's your money going in. So if you put, $1,000 in,
yeah,
and all of a sudden the asset goes up by 20%, you will withdraw $1,200.
Who pays my money back?
Well, it's the exchange. So it's just like Is
it like trading currency?
Yeah, that's a better way to look.
Is it like so? In other words, I have an account, right, and I trade in crypto, and if my account grows, I can go to the platform and say I want X amount of dollars out of that account.
Yeah, and you can the way the blockchain technology works is that every sale is recorded on the ledger. So
yeah,
your sale is recognized, and you've got say Bitcoin on that particular blockchain ledger. When you sell it, that will come off that, and essentially it's a marketplace. So someone else is buying it back.
But when you transfer, like you say, you transfer Bitcoin to Ethereum.
Yeah.
Right. So you've exchanged what you had with one platform onto another, right?
Yep.
And then that new platform pays you just the same.
Correct. Because it's done under the same exchange. So yeah, you're swapping coins around, but that's where the exchange comes in, because they're kind of facilitating it instantaneously. But in the background, essentially, they're just selling it and buying it on behalf of you. And you can, and the way the tech works is you can just action that instantly.
Yeah. So in other words, what's comparable to crypto trading is like crypto trading is more akin to trading currency.
To a certain degree, but it's its own thing as well. So
yeah,
it's hard to compare because it's a mix of both. It's a mix of share trading and not investing, share trading and currency trading. It's kind of a hybrid of both without anything to actually assess where the markets are going.
So when you, sorry guys, so when you invest in crypto, you're not investing in the currency, you're also investing in the company.
Well, it's not necessarily a company, it's its own asset class.
Yeah, so that's what I mean. Yeah. So it's not just an investment in the currency.
Well, it's more or less a trade of the currency.
Yeah.
So you're getting, what's the cost of Bitcoin at the moment?
About 56.
56,000. So one Bitcoin equals $56,000. So if you wanted to buy one coin, think of it like a share as well, something similar like that. You would be able to buy one for $56,000.
Right, okay.
If, for example, the value went to 70,000 a coin, you could sell your coin or part of your coin to realise a cash out.
Okay.
Yeah. But yeah.
All right. So, Aaron, talk to us. I guess we've heard a little bit about different tax rates, different tax treatment, whether you're treated as a trader, as an investor. I guess what's the difference and what do people need to be aware of when it comes to tax?
Yes, this is another one that's kind of, I guess, come more prevalent with crypto. Is generally, 5 to 8 years ago, when people are just buying shares, 99% of people were investors. So they're, buying it, holding it relatively long term, 6 months, 12 months, or 10 years or whatever. Now, a trader from the ATO's eyes is someone who is actively, have got, systematic ways of how they're investing. They're buying and selling at, weird times of night because the market's up and those types of activities. And they're trying to cash in on like small 2 to 5% swings. So that, you might hear the term swing trading, day trading. The way they're taxed is a bit differently. So obviously, any trader isn't holding any asset for 12 months. They might be holding it for a day, they might hold it for an hour, they might hold it for 5 minutes. And so the way that they're taxed is slightly different. I won't go too technical because it's a bit, it was going ahead, but essentially your value at the end of the year is considered your trading. So because the way that HO look at it is that you're running a business of investing. And so pretty much all your sales income, all your purchases are expenses, and then there's an adjustment at the end of the year for the value of your stock at the end of the year. And simply put, that's how that's looked at. So depending on how you go, it can be favourable or unfavourable being treated as a trader, but it's pretty obvious if you are. And what's happening is that because of the way crypto is traded and people are, trading daily, they're not holding it for, a month, 2 months, 3 months. They might be a trader without actually knowing it. And the tax rules are slightly different. So it's just something to be aware of. If you think, I'm actually, chasing quick wins instead of holding it for a long term, you might actually be considered a trader, and your tax, the way it's taxed is slightly different.
Is it substantially different?
It depends on, there's so many variables. It depends on the level of trading, the value of your stock, if you made a loss or not. I can't answer that one. It's so variable on so many different circumstances.
If you make losses like out of an account, you can carry them forward as well, or not?
Correct, but both an investor, your investment income is treated as capital. So if you make a capital gain, or you make a capital loss, for example, you can claim that against other capital gains. Capital losses can be carried forward for other years. Now, in a trading scenario, there's a whole suite of other rules. So if you make a loss, there's circumstances where you can claim that loss against your salaried income, which can be highly beneficial. Because essentially, if you make a trading loss of 30K, you put that against your taxable income, that's a fairly substantial deduction. Whereas in a capital sense, you make a 30 pound loss, it just gets carried forward. But there are other scenarios that if you make a gain of 100 grand, in a trading scenario, you're going to get taxed on your marginal rates without any capital concessions.
And Joel, I guess a quick one, or perhaps Aaron, same sort of treatment when it comes to shares, ETFs? Do the same sorts of rules apply, trading versus investing?
Essentially, yes. In the eyes of the ATO, then yes, shares. But generally what you see is when you're investing in shares, unless you're actually a day trader, which, for example, the ASX trading hours is really only trading between, 9:30 till 4. You're not, and you've got, you're trying to perhaps trade derivatives as well to get short-term exposure. It's probably unlikely that the standard, mum and dad investor is going to be classified as a trader in the stock market.
Excellent. All right, so Aaron, another one for yourself. What is crypto mining? And I guess then, how is one taxed if I mine a coin?
Yeah. I'll quickly give a brief history. I'll talk about Bitcoin specifically for this example. So when Bitcoin first came out, the creator said there's a maximum of 21.5 million coins or whatever, around that amount. And the way coins come into existence is by being mined. Now, mining is literally verification of the blockchain that Bitcoin sits on. So it's pretty much solving math equations to ensure that the blockchain itself is secure. That sounds really complicated, and I get the concept, but it's just weird. But that's essentially the process of mining. So you think, when people go mine diamonds, they're literally digging. When people are mining cryptocurrency, it's just a computer solving equations. Now, every 4 years, the mining cap is halving for Bitcoin. Hence why you might see every 4 years a spike in the value, because I think we're year 2 or 3 into the current halving period. So I think the prediction is by 2134 is that all Bitcoin will be mined, and then that's it. There's nothing more in existence, and that's it. So people are investing heavily into equipment to mine. Now, the biggest cost is, bar the actual computer setups, is the electricity. So I have a couple of clients who call themselves hobby miners, but when you're spending 30, 40 grand of equipment, I don't know if you're a hobby miner, but their power bills have literally gone from $300 for a 2-month period up towards $3 grand. So that just shows the actual generation of power that it takes to mine cryptocurrencies. And there's crypto farms where people just have CPUs just lined up. There's fans in there to kind of keep it cool, because they really believe that Bitcoin can go crazy in the future. So that's kind of the theory of it. From a tax perspective, if you are a hobby miner, all your expenses are void, then they're not capital. Can't claim them, but when you do sell it, it's a capital sale. So your cost base is 0, and if you sell it for 80 grand, you pay tax on 80 grand. If you hold it for 12 months, you pay tax on 40. Now, if you're running a business of crypto mining, you can claim your electricity, your capital equipment, and the actual income once you sell the coin is just treated as ordinary income. This is a space that the average person won't even go near, because obviously the investment is pretty heavy to actually just get it started, because the computer equipment alone costs 20, 30 grand plus 3 grand of electricity costs every 2 months. It's not, unless people are really passionate about it, it's not something that people are kind of jumping into.
Makes a lot of sense. And I guess, Joel, from your perspective, from a financial planner's viewpoint, investment, diversifying the assets, someone sitting on $100,000 just starting out, is crypto mining something that, generally speaking, they should be looking at, thinking about, avoiding like the plague?
Well, that's how long's a piece of string, right? If I had a client to come to me and said, I'm going to spend $50,000 for the next 6 months in the hope to find something somewhere, like a coin, I'd be like, okay, you do realise you could probably do something a little bit more constructive. But obviously, yeah, it's important to realise that cryptocurrency is, in a way, an asset class. It is a financial I was going to say the word investment then, but then I'm just sort of like, is it? So it's its own asset class. So you probably don't want to have all your eggs in sort of one basket either. You want to generally.
If the basket is very good, what happens then?
If you've got a very full basket and you're wanting to complement that basket, I would be happy to help you. Then obviously, of course, everything is key. You don't want to have all of your financial assets in very highly volatile environments. So as we see, particularly with Bitcoin or other coins, particularly, they're very volatile. They bounce up and down quite aggressively. So if it was all in there, 1 minute you could be a millionaire, the next minute you're broke. So yeah, you're having millions on toast. So I suppose the diversification piece would then kick in. So if you had a small portion of your overall wealth in some sort of cryptocurrency assets, then that's probably just complementing your overall wealth. You might not end up on beans on toast in extreme examples, but you can still take short-term, I suppose, little bumps in gains where necessary. But I suppose being also mindful of, again, tax treatments and how that's going to look in the overall strategy of your investment portfolios.
But that would depend as well, I think. Well, I'm thinking from my own perspective. Depends on your personal situation.
Absolutely.
At a given time.
Absolutely.
Because I don't think the same now as I did 15 years ago or 10 years ago.
Absolutely.
Right? So my question would be like, is crypto highly volatile?
Yes.
To the point that
You
have to be very mindful whether it's 5% of your total investment.
It's probably the most volatile asset going around, and 30 to 40% swings in a day isn't uncommon. So if you're at the point where you're like, if I lose 40% of my wealth, how upset am I going to be? If that's going to really upset someone, then it's probably not an area where you want to go hard into.
Generally, in financial advice, particularly, I look after clients of all age categories. They're as young as 18 years old as 79. So obviously the advice principles that are applied towards a 79-year-old to an 18-year-old they're vastly different. Because, if the 79-year-old loses all their money, they're not going to have the ability to recoup that.
Even if they don't have cash flow.
Correct, yeah.
Because this is where the investment thing comes in. It's like, if you commit to something and then you say, I'm going to see this through, right? And if you need to put more as you go along, you can, you do it.
Yes.
But if you're at the 79 end of your scale, it might not be
correct.
A worthwhile strategy that applies to you, right? So, okay, I have a reasonable understanding.
Yeah.
Excellent. And I think Aaron raises an excellent point as well. And I think to your point, Joel, diversifying your assets. I mean, if you're sitting on $2 million worth of crypto, but there's $1 million unrealized tax bill sitting in there and you can't generate any yield, then that's going to be fun for all of about 10 minutes until the ATO comes knocking. All right, so Joel, I guess we'll throw this one to yourself to kick us off. I guess getting exposure to cryptocurrency, whether it be directly in terms of buying the coins, other ways to get exposure to this theme if crypto does take off. What can we do, I guess, inside our superannuation?
So I suppose from a direct investment in crypto within super is probably always going to be that little bit more tricky. Any sort of retail or industry fund is probably not going to have a direct Bitcoin buying option. There probably might be, for example, setting up a self-managed super fund where you're the trustee of that fund, and I suppose you can dictate the assets and the investment strategy that goes within that fund. You might have the ability to buy direct coin assets. But then again, if you have superannuation, for example, or a provider that allows, for example, the trading of direct equities or ETFs within your portfolio, then you might be able to still get exposure through, I suppose, the previous methods that I was talking about, whether that be the ETF route, the managed fund route, those indirect companies that are benefiting from the cryptocurrency environment. But yeah, generally speaking, we're going to see where the trustee of those funds, particularly the large retail funds and industry funds, they're going to be probably a little bit more selective about what assets they hold inside their fund. Because at the end of the day, just like if you had an SMSF, you're the trustee of the fund, and so therefore you're required to, I suppose, maintain its compliance. So the big industry super funds or the big retail funds don't particularly will ever allow themselves to be put into a position where their fund is non-compliant, because it's not just them. They could have hundreds of thousands of members where suddenly they're being penalised for a non-complying super fund. And then that would have, I can imagine, an AFR write-up like nothing else.
Absolutely.
But yeah, inside SMSFs, obviously, if your investment strategy allows that, again, it comes down to the asset class that it is. You're riding on your retirement savings for the benefit of what? It's diversification again is highly important, and at what life stage you're at.
Makes sense. And I guess Aaron, Joel touched on it, setting up a self-managed super fund. So is it as simple as I just set up my SMSF and go and shoot the lights out, day trading cryptos every night?
Look, unfortunately, it's easy to do that. Now, look, the SMSF rules, to actually get it is highly recommended you get advice to actually set it up. But I'm finding it more common that people are coming to me and are like, hey, I want to set up an SMSF because I want to go nuts on crypto. And the age profile of those people are very different to the traditional SMSF owners. Generally, the rule of thumb is if you have 200k on super, that's kind of when you can consider it. But, I'm having a lot of people between 30, 35 age gap, and traditionally their supers, anywhere between 50 and 100k, that are like, no, I want to set it up because I want to put all their viewpoint is, well, there's a pile of cash that I could invest with that, I'm happy to risk at the moment. And so they're literally just setting funds up so they can do that. So it is becoming more common, which, 10 years ago was probably unheard of that age profile with that super balance being like, hey, I want to set up a super fund. And on top of that, it's also, super funds need to be audited every year and everything needs to be revalued at 30 June. That's the problematic part for crypto and super funds, because obtaining market value of, now Bitcoin, Ethereum, pretty easy, but all your altcoins, alternative coins, and altcoins, anything other than Bitcoin, especially some of the real strange ones, that people will probably, they're the ones that you see stories of people making, 20-fold on their money, that people are probably like, oh, I might as well chuck $1,000 in. Finding those market values are really, really difficult, and it will just get savaged by an auditor unless you have good records yourself. So if that's something you're considering doing, I would just highly recommend keeping on top of market values and having something to substantiate your value at the end of the financial year, because an auditor will be like, well, this could be nothing. We don't know. You're taking this off some random exchange based in the Cayman Islands. How are we supposed to accept that as evidence?
Just when you say it's valued at the end of each financial year, is that so you have to pay a tax on that?
No, so it's the way super funds work, they'll do an unrealized movement in there. It's just part of the reporting. You don't pay tax on that. It's just for just your reporting sense for your super fund itself, but no tax on the unrealized gain portion with a super fund.
And I guess, Joel, a question for yourself. So I've decided it's the right thing to do. I've set up my SMSF. I've got 20 grand in there. Thought it was a great idea. Chucked it all in a coin, and now it's worth $8 million. I'm 35. Can I retire and take that money out now?
No. Well, if you had 20 grand, your setup costs are probably well. What are they to set up?
Humour me.
There are a couple of grand to set up. So, your net investment, let's just say you've got $2 million. No, you cannot. So in order to get your money outside of super then, you need to meet a condition of release. So a condition of release is you meet a preservation age, which by the going of everyone in this room, under current ATO rules, it is age 60 at minimum. So yes, it might be good that if you did get a win of $2 million, it might be a good question to start diversifying that portfolio with those $2 million. You're going to incur, obviously, capital gains on the sale for diversifying. But yes, no, you would ideally need to write it out. And then that's going to bring in other I suppose, considerations, because as we were speaking about earlier, funds are valued at the 30th of June every year. So what that then contributes to is what's called a TSB, so a total superannuation balance. And let's just say hypothetically, your TSB was above $1.7 million. That reduces your eligibility to contribute again. So,
which is not a terrible problem to have.
No, it's not. It's not. But, you might need to, say, for example, offset a capital gain or something in future where your TSB is above a certain limit. So you can't actually offset that capital gain for another personal event. So it's just, I suppose, being mindful that where there are strategies for like capital gains offsets or small business rollovers, there are TSBs that come into play.
Excellent. I think you raise a really important point there, and I don't want to spend too much time on it tonight because otherwise I feel we'll get far too technical and we'll never get out of here and let everyone have a drink. But I think you raise a really good point. I mean, if you've invested in crypto, it goes to 2 million. I can't contribute any more to my super, but next year that's down to 400,000. Well, now I can contribute, but I've just lost a year of contribution eligibility. So excellent. Really good things to think about. All right, so market outlook for 2022, a tough one. We're
Crystal ball.
nearly 2 months down. So Aaron, I guess we'll start with yourself around, and again, not looking for any specific coin predictions here, but I guess the whole cryptocurrency space, the NFT space, where do you see things, I guess, trending throughout 2022?
Look, people a lot smarter than me are saying that we're still in for pain. Take that as you wish. Everyone's threshold for pain is different. But yeah, it's such a highly volatile market. And I think if you look at the trend, I'm talking specifically about Bitcoin because generally most other coins will follow the Bitcoin trend to a certain degree. So especially your bigger ones. So I talk generally about Bitcoin at the moment. It's probably going to go down a lot. Some people think it's going to go down to 20k US. Whether that's the case, who knows? But it's also equally as likely that it might hit 80k US by the end of the year. Who knows? And that's the strange thing that people. I understand that it's a strange concept to understand that it can literally swing that much within 6 to 9 months, and it's highly possible, and it's happened before. So that's a bit of a roundabout answer, but it's literally impossible to tell. Now, other outside factors, Ukraine and Russia in particular at the moment, is really having an effect on it, but those things can turn around really quickly. The US Senate has been inquiring into Bitcoin for the last 5 years and nothing's really happened from there. So there's always those background factors that are going to happen. Other things like El Salvador treating it as legal tender, that kind of blip in the market. India have just put in a crypto tax of flat 30%. So there's a lot of things going on that will dictate it, but you can't pick it. And I guess in the NFT world, it's one of those things that it's worth whatever someone's going to pay for it. And that's the really strange thing. If you don't know what an NFT is, it's literally a digital collectible. Literally like trading cards, like NBA cards. It's a digital version of that. But the difference is people are spending millions and millions of dollars on them for literally a JPEG. So, and people and kind of going back to SMSFs, that's where it's getting tricky because how are we supposed to value it? It's pegged to Ethereum generally, but the marketplace for NFTs is still different to the actual underlying NFT. It might be worth 10 NFTs, but there's got to be changes in the Ethereum price. So it could be worth 10 Ethereums, and there could be changes in the Ethereum price, but the actual NFT might go up in value by 10 Ethereum, another 10 Ethereum. So it's quite a strange one to kind of monitor, and it's also a space that there's a lot of manipulation of markets is going through because it's pretty much a project. So an artist might release 20 NFTs, and again, the way the crypto blockchains work is they can create multiple accounts, and everything's recorded on the ledger, and they might buy 5 of their particular project from different accounts and charge 100k for each one. And then all of a sudden, but it's just selling to themselves. Then all of a sudden, they'll list a couple for 30 grand, and the general public come through and are like, hey, wait a second, 5 of them got sold for 100K, all of a sudden they're 30K, and people are like, I'm getting a great deal. Little do they know it's the same owner just moving money around and creating this artificial inflation, and that's super, super common. So it's one of those industries that I haven't really delved into because there's a lot of uncertainty. But
And I guess, Joel, from your perspective, if we look at global equity markets, so it's been a bumpy start to the year, I think, would be a polite way to put it, perhaps. But I guess, how do you see the rest of this year playing out in global stock markets?
So I suppose within markets, particularly, you know, what we're starting to see is, I suppose it was later end of last year, Biden came out and said that basically inflation in the US is here to stay. And so what started that sort of more bumpy January, end of January, early Feb, was certain markets starting to price in inflation and rate rises and what that looks like to, for example, companies carrying debt on their balance sheet. Because in increases of, say, 50 basis points or 1 to 1.5 bips, they're going to start to feel a little bit of a cash flow pain, which is going to affect the return of the company if they're funneling more of their cash flow into debt. So I suppose, you know, unfortunately I left my crystal ball somewhere, and if I had my crystal ball I'd remember where. So I sort of, the outlook, particularly in Australia, you know, we're probably going to anticipate some rate rises this year. You know, if I look at a good indicator of that, particularly, is the major banks. So the major banks already start to price in, for example, residential home loans and investment property home loans. So when we start to see, you know, the 1 to 2 year fixed rate debt start to get hikes, that's sort of a way that the banks are factoring in that we're going to have rate rises. And so that has already happened in the last 3 months. So I think particularly the Australian stock market has had an adjustment in January to accommodate for those sort of changes as well. But it's probably not going to be the case that I'm going to see drastic rate hikes, 1, 2, 3% in sort of a very short period of time, because you think, you know, lots of Australians, particularly through COVID and over the last 3 years, have invested heavily in the residential property market, and big rate increases are going to put a big brake pedal on the economy if suddenly everyone's surplus cash flow is starting to erode. But from I suppose an overall perspective, long answer, I see it probably as still a strong year, but it probably will be a little bit bumpy, given that we're likely to have some policy changes with the election due as well in Australia within the next, 3 to 6 months.
Makes a lot of sense. All right, guys. Well, I'll throw it into the floor. Yeah.
So I'm trying to understand, like, cryptocurrency. What are the variables that affect it going up or going down? Is it just hang on, let me finish. Is it like for instance, if there's a great demand for it, the price goes up? If there's people like wanting to, invest in crypto, does the price go up?
There's so many things that can. So part of it is the general demand and supply.
Supply and demand.
Part of it is.
Yeah.
But there's certain coins that have unlimited supply. So that kind of theory doesn't apply to those ones. Yeah. But there are also outside factors that no one can predict that will affect it. For example, the best example is Elon Musk. He tweeted 3 words and it tanked the Bitcoin price by 20 to 30%. 3 words. So when someone like
Elon
that,
Musk. If I do it, nobody will.
Exactly. But that just shows that when someone like that has that much control over such a large market cap, there's no way to predict what the price will do. Because if it's that volatile to 3 words, then how's anyone going to predict where it could go? Yes, certain coins, in particular the ones with limited supply, such as Bitcoin, demand and supply is going to have a huge play in it. But in the whole scope of it, when supply isn't an issue, the outside factors will come in towards, the general sentiment to crypto, other outside world events, such as, potential war on all those type of issues, that's going to have more of an effect. But again, it's you're throwing you're throwing the dart at a blank wall, because who knows, which doesn't really help. But that's the risk. That's why it's so volatile and so risky.
So what would you say is a type of investment as well that if you can make an investment, and if you lose it, it doesn't change your life. Your life can go on, right? But if is it investment that if you lose it, it's going to change your life, then you have to be more cautious whether you do it or not.
Yeah, and I think the fundamental principles of your investments is you spread your risk. You don't put all your eggs in one basket. It's like at the end of the day, it's just a highly volatile asset. So like Joel said, you're not gonna put anything that you're gonna change your life. You're gonna dread losing, because the way people should invest in crypto is you spend what you're happy to lose, and that sentiment couldn't be truer for crypto.
Yeah, that's what I meant by not affecting your life. Like if it goes bad because it's highly volatile, you don't have to pay for it. So. And
that's I guess any investment. But the difference with crypto is that it can happen in a much shorter time frame. Yeah. Like for example, if you buy a property, the price is taken, it might take a few years, whereas crypto could happen within 2 weeks. That's probably the main differential.
I suppose for the sake of argument purposes, crypto, when we look at sort of underlying assets and values of, let's just take, what did you mention it? Commonwealth Bank or Wesfarmers, say for example, right? Wesfarmers, big shareholding, Wesfarmers to fall from, what is it now, $55 a share or something to zero, that's a significant event for Wesfarmers. That means that the value of every asset that Wesfarmers has is now zero. Yeah. So that means Bunnings is now zero. Yeah. All of the assets they've got are now zero. With Bitcoin, I think, it's sort of a little bit different, because that underlying asset value is not necessarily there.
For Bitcoin?
For Bitcoin.
Now, there are certain coins that do have that. Now, I won't go too far, but there are certain coins that use the technology of the blockchain technology and are using it for other purposes. For example, someone was telling me about there's a coin called VThor, and essentially it's the technology they're using the blockchain to track shipping containers and checking, to maintain temperatures in the shipping containers that are getting moved around. So there are uses of the blockchain that are outside of just Bitcoin and financial. There are actual projects that are happening that are the underlying, value of the coin, but that's also an evolving space as well.
Yeah.
Excellent. Any other questions from anyone? All right, guys. Well, look, thank you so much. I think that's, I've certainly found it very insightful, very helpful. Lots to think about. No nasty surprises from the ATO. Plan for the upside and the downside. Don't gamble with money you can't afford to lose, unless you don't ever want to sleep again or looking to separate from your partner. That's probably a surefire way to do that. But no, huge thank you to our speakers tonight. That's been really helpful, and really hope everyone's got a lot out of the session. But please do stick around and join us for a chat afterwards. Thank you all very much.